Welcome to another edition of Risk and Return. I'm Charlie Gasparino with half a voice, with Bob Sloan, my partner, the granddaddy of data at S3 Partners, who has a full voice. So I may just ask some mild questions and let him take it away.
All right, Charlie. Thank you
For once, I can't speak.
Well, listen, it's good. We get to go through this quickly because we're going to get you out of here because you're not feeling well. Okay, 2 picks this week. We're back in earnings season. We were doing this for a while, and you say, "Well, where are the picks?" Well, we only do it during earnings season. Earnings season starting in earnest right now. On Friday morning, Schlumberger Drilling Company, we're bearish on that. We have a bearish call on that. And then on next Tuesday, Halliburton, another drilling company, we're very bullish on that. Let's roll. 2, a couple of things. Number 1, we talked about the most shorted basket last week. There was a nice article in the Financial Times. It is still going ballistic.
I know. I saw it. Great call. Good job. You called it way before anybody else.
Way before anybody. It's up 65%. Okay. Last week, we said we're going to talk about AI, quantum, what's happening in these stocks. IONQ is the market leader in quantum computing. As we talked about last week, what is quantum computing? It's computing with more numbers, literally. It's not 0 and 1, it's 0 or 8 or 0 and 9, depending on which model you're using. It just means you can do an enormous amount of calculations in literally a nanosecond. IONQ is a $26 billion market cap company. The betting is that it can be another $1 trillion company. It really could replace the hardware GPU, the NVIDIAs and that kind of thing, because that's parallel processing. This is completely different. And what is happening is that the short sellers are down about $2 billion year to date. Current notional short about $4.8 billion. It's about 19% of the float. And you can see short interest is rising as the stock rises. So you can see that chart there.
When are the shorts going to be right on AI? That's the.
You know what? Maybe never.
I can't help
right? No. I mean, and this is the thing, right? And this is why it's so hard. It's actually a great question.
Yeah.
It seems like hey, why would anybody do this? It's a very special mindset. It's why a lot of people don't do it successfully. It's why Chanos, and even he, as good as he is, eventually the upward bias in the marketplace outruns your capital. I don't know how he does it. It's a crazy thing. If you're watching us, follow him. He's got some great stuff. He just does. And he's not always right, obviously, but he does frame an issue. And he's sometimes right, sometimes wrong, but he frames it. Another one interesting is Symbotic, right? It's an automation, software, and robotics company. It's things like warehouse management, things like that. This is a really interesting battleground stock. The short interest as a percentage of float is 34%, the way we calculate it. High volatility. Watch this stock. It's pretty. That is one where you could see something really interesting happen, where the shorts capitulate because they're just losing too much money. So the last thing we want to talk about is DraftKings. When Polymarket was bought by X, and you can see here short interest, and you can see the price action. You see short interest rising like this. There's a real competition between Kalshi, and Polymarket and DraftKings, and the shorts believe that this business model is going to give way to the prediction business model. Those are our 2 picks, 3 short data, 1 battleground. Back to you.
We're going to get to a guest in a few minutes, and I just want to go through a couple of headlines because there's some stuff that could break essentially when this thing hits tomorrow. Number 1, this could be a pardon of CZ. You know who he is? The guy that started Binance. Changpeng Zhao, I believe it's called. The co-founder of ByteDance, just very big player in the crypto market. There's talks heating up inside the Trump administration about a pardon for him. I don't know if it's imminent or not. I can't tell you. I can just tell you the talks are heating up. There's a lot of people inside Trump world who think that he was a victim of the sort of overzealous crackdown on the crypto industry that our next guest will talk about. He'll talk about the crackdown. Number 2, also imminent. a bid, finally, a real bid, not this, we may want to pitch this amount of money, a real bid by David Ellison of Skydance Paramount, the son of Larry Ellison, backed up by Oracle Money, the second richest man in the world, for the giant studio streamer cable company known as Warner Brothers Discovery. That bid, from what we understand, is imminent. It could come Friday morning. It could come next week, but we understand that thing is coming close. That David Ellison's running around getting private equity involved, Apollo's involved. And David Zaslav, one of the smartest guys I know in the media business, is actually relishing being in a catbird seat. He's actually shopping Warner Brothers Discovery to other players. Let's see where Ellison comes. If he comes with a bid that's close to 25, I wonder if Zaslav just takes it, just because of what, he's saying maybe it's a $30 stock, $30 a share stock. By the way, if it was a $30 a share stock, I think this is a $70 billion deal. So the numbers here are pretty astronomical. We should point out that David Ellison, if he asks his father, has the money. If he doesn't ask his father,
got the dough.
He's got
yeah, he's got the.
Anyway, that's where we are. Keep an eye on that next couple of days. My stories have been moving the stock on Warner Brothers Discovery. My CZ story, essentially, went parabolic in crypto. Again, a lot of this is, the way this Trump pardon him. Listen, Trump's got business interests. His sons do, at least. Family does in crypto. Is it a good look to be pardoning some guy you might do business with? On the other hand, as our next guest is going to talk about, there was a lot of overregulation in the Biden administration, a lot of things, including crypto. So it's an interesting balancing act. And Trump might just punt because he's got other things on the agenda. He does have to still pick a CFTC chief, which he hasn't yet. That's the chief regulator, basically the chief regulator with in crypto this day now. Because remember, Paul Atkins, the SEC chair, is saying most of this crypto are commodities. Therefore, they don't come directly under the SEC. So the CFTC gives it the first look. So that's where we are right now. My headlines and in my gravelly voice. And by the way, the election of the New York City mayoral election is coming down the pike. By tomorrow morning, there will have been a mayoral debate between Curtis Sliwa, Zohran Mamdani, and Sliwa, and Andrew Cuomo, and let's see if that moves the needle. I have a feeling the debate is not. I just don't think most voters are watching the debate. I will be. So next week we can talk.
I will be watching it too.
Yeah, me too.
We're going to save your voice, and we're going to call it a day right then and there. Get a towel, get some chicken soup, get a nice hot meal.
Oh, actually, we're not calling it a day. We got a special guest coming out. I'm just going to let you do most of the talking. Why don't you bring in our next guest, someone that you know quite well?
Sure. Charlie, thanks for hanging in there today. We know you're feeling under the weather. We love you. You always put in the effort, never misses a week. Hardest working man in podcast. Thanks for being here. And our guest, Marc Elovitz from McDermott, Will, and Schulte. Everyone out there, if you're in the private fund management business, aka most of the time that means hedge funds, it could mean a lot of different things, you probably have called Marc for advice. He is really one of the deans in the business to talk about financial regulation, particularly when it comes to private investment advice. He's on pretty much every single important committee in a very important firm to the investment management business. Marc, welcome. Great to have you to Risk and Return.
Thanks for having me. Thanks for the too generous introduction. But I'm excited to be here.
Great. So, the hedge fund business has just grown exponentially over the last decade. It was maybe $1 trillion, $1.5 trillion. Now it's upwards of $5 trillion, somewhere between $4 and $5 trillion. And financial regulation in this administration, it really means something. And the landscape and how to do business and the ways in which we transact, the way in which we invest is changing. And top of mind, just for the audience, what are the one or two zations? We have democratization, we have innovation, tokenization, we have all these zations. What are the things that are on your mind? What's important? What do you spend most of your time talking about? What are your clients saying? You know what? This really is a sea change in the way financial regulation is actually administered.
Yeah, well, it's great to focus on what's actually meaningful, what's actually, because there's a lot of noise when it comes to financial regulation, right? There's a lot of talk of deregulation. There's this kind of assumption that, we had the Biden, Gary Gensler, SEC era of hyper regulation, and now we're on to deregulation. And there's kind of this assumption that what goes along with deregulation is you get rid of it, all the regulations go away, and you're left to those nice free markets. And of course, that's not the way that it really works. There is existing regulation, and there will be a lot of new regulations. Part of what's exciting about what Chair Atkins at the SEC is up to is coming up with new regulations to really move things forward in a productive way, because it's not as if before Gary Gensler everything had been worked out and it was smooth sailing. There's a lot in the private investing world that was being developed, right? As you're saying, $1 trillion to $5 trillion, huge growth, huge changes, a lot happening. And then it's almost like we had a detour with Gary Gensler, a really frustrating and difficult detour, but it was a detour because there were all these rules proposed. Some of them went into effect, but most of them, at the end of the day, they meant a lot to people like me in the financial regulatory nerd geek world, right? But at the end of the day, they were about a compliance burden. They were about spending more money and doing more paperwork and all that stuff that drives people crazy. But it was a lot of red tape. It was not a lot of actually changing the way, the plumbing on Wall Street, changing the relationships between investors and fund managers. There were attempts to do that. I mean, there was that private funds regulation that the court struck down. But there's a whole sea of regulations that were proposed and again, a few adopted that really wouldn't move the needle substantively. Things like cybersecurity, you have to have certain procedures, and vendor due diligence, and things that, ESG, things that really don't go to the heart of what the investment community is focused on. They were annoying and difficult, and some of them would have been cumbersome, like the approach to AI would have been really cumbersome, but they weren't changing kind of the fundamentals. So
Right.
now that we're beyond that, and Chair Atkins came in and everything that was proposed and not adopted, he withdrew. So ESG, cybersecurity,
That's
all
gone.
gone.
Yeah. The question I have for you though, is the hedge fund business actually bigger? Or is it just asset under management is bigger?
Well, there's been consolidation, a lot of consolidation. So a lot of if you go by numbers of funds, you now have these very large pod shops, right? That a lot of investing is being done by different people under the same umbrella. I do think that there are a lot more people involved, and there are a lot more assets involved. It's also, hedge funds now are much more than long short equity trading, right?
Sure.
And so the private investments that are involved, that has really exploded in the last several years.
And one more question before I turn it back to Bob. Has Paul Atkins actually articulated a sort of agenda? I mean, I always thought SEC officials are supposed to put out something that says, here's kind of where we're going with this. And I don't, have I missed it? Did it happen and we didn't notice?
No, he is out there, and he is talking a lot about innovation. He said that it should be called the Securities and Innovation Commission. He wants, there are the different pillars of what the SEC does. Investor protection is one of them, but there's also capital formation, right? The IPOs, and then there's also orderly markets. And Gensler and others were just completely focused on investor protection. And if you talk to some folks and some politicians, they're like, the SEC is here to protect investors from, big bad Wall Street. And at the end of the day, you start thinking about where we're at in terms of who has access to what investments, and we'll talk a little about democratization, retailization, but there is much more of a focus under Atkins and will be on all three of those pillars. So including capital formation, including orderly markets.
Although Gensler tried to do a restructuring of the market, didn't he? I remember there was something that he planned. Is that gone now under Atkins?
Yeah, a lot. I mean, Gensler tried to do some work on that. A lot of it was about this idea of let's get more data. Let's
Yeah.
get more and more data. And of course, make the industry pay for it and get more and more data. And what are you going to do with it? And of course, we know that the SEC, like a lot of organizations, has been hacked. And the idea of just turning over all this data when you don't have a plan for what you're going to do about it is just fundamentally problematic. So that's been slowed down. And I think many think that it will dissipate. The impact of that will
Now they
dissipate.
could just go right to Bob and get all the data, right? Go to S3.
Well, I gotta tell you, from our own point of view, we're agnostic. You know, the more data that's available, the better to us, and we're doing just fine as it is. So we have no real, just to be clear, we have no real dog in that hunt. And it is an interesting thing because you talked about the plumbing on Wall Street and regulation. I think the interesting thing is that when we use the word plumbing, it means it carries waste. And what actually Wall Street is a power grid, right? It's it's access and leverage and all these different things and connectivity and innovation. So how is what's happening now in the Genius Act, in other things that the SEC has on its mandate, how is that going to change, impact, affect, or not change at all how money is moved? Can we get into that a little bit?
Sure. Yeah. No, I love the point about plumbing. That's what I've always, referred to it as, but really you don't want to think about it as waste. You want to think of it as power lines, a power grid.
Right.
And these are the conduits. This is how it all fits together and works together. You mentioned the Genius Act. Genius Act, tremendously important. Potentially, you never have these things will play out, but it's not so common to get legislation. Once you get legislation and financial regulation, that can be really powerful. And legislation that says that that stable coins are permitted in this way, that presents an opportunity to really radically shift the way that money moves, because and of course the traditional banks, what the crypto industry calls TradFi, traditional banks, they're part of that dialogue and discussion about the Genius Act. And they want to make sure that, you're not getting yield on that, right? Because you don't want those to be, be competing with that. But at the end of the day, the disruptive possibilities of the Genius Act and having stablecoins can potentially ripple out because of what it will potentially facilitate for tokenization and the use of digital assets. Once you've got more of the power grid, we'll call it, on blockchain, and the incredible efficiencies, the way that smart contracts work, you put all that, it's finally using the blockchain in a way that could really transform a lot of how money moves.
Where are we on that? Like how far in?
The there's the legal part of it, and then there's the actual technology. The technology is there to really upend a lot, and the financial players, the fintech firms are incredibly creative. Some of the smartest people coming out of banks and coming up with really great ideas, and a lot of which could threaten traditional finance, right? That's all there. Having the Genius Act pass is significant from the legal perspective, because now it's going to take a while, but those technologies and that innovation could come to fruition in the next 2 years, say.
Marc, just for those playing at home that watch us, can you just very simply say, okay, this is what a stable coin is. This is what tokenization is. This is
Sure.
what the blockchain does. And and innovation is obviously, I think very simply, it takes a while to move money. Moving money and then holding your assets you bought, it's held electronically in the DTCC and other places. That's been around for a long time.
Yeah.
And so it is the system, and it's very well established, and it's owned by the major banks, and that's how money moves. And what in the economy, we want to make sure that money moves, because if it slows down, we don't want the system to break down
and move safely. I mean, that's
and move safely. So it'd be
Yes.
great just to start from the top and say, okay, this is what a stable coin is, very simply. This is what tokenization is, and then let's go to blockchain and why that's important.
Sure. And maybe let me flip that and start with the blockchain, because that's the underlying
Building block, right? Sure.
building block, which is that's what we learned years ago about Bitcoin. It's like, well, what is this thing? This thing is shared code. It's shared data that exists and in not in one place, but is open access into, around the world. You have access to these records, these digital records of transactions. Now, they don't have, John Smith and Mary Smith, sending money to each other on them, but it is a digital record. And that's one of the things that makes it so powerful, is that it is open access in that way, and that it does create a digital record that is very powerful. And you get that by having all these different kind of computers talking to each other to simplify it. So that's how Bitcoin transactions were started, and that's how they flow. And if you think about it, there's no reason that a lot of other transactions can't happen on there. And the thing that I always like to think about is real estate. Anyone who's ever bought property or bought a house, you go through all this stuff with title and deeds and these old, documents from the 1800s and surveys, and people are signing things. You're getting insurance about titles. Really, the blockchain is a way to have a permanent record of transactions that is accessible to everyone, and you don't have to go to the clerk's office and find a piece of paper, right? It's all accessible. So if you do that, people have been doing that with supply chains for years now on the blockchain. But when you think about financial transactions, why not do financial transactions on the blockchain? And smart contracts are contracts where you have an agreement with someone that's almost self-executing because it executes by using the blockchain.
so like what's great about
Deregulation. Yeah, sorry, Charlie. So
Go
so deregulation, just for folks that are watching this show, Marc's talking about something incredibly powerful, which is we're worried about the government borrowing too much money and crowding out capital. And the power of blockchain is that it frees up capital, a lot of leverageable capital. It's a very, very, very powerful force. So for example, a lot of times in capital markets, you have to put up margin. You have to put up a little extra just in case something goes wrong. If you could free up that little extra because you had transparency, total transparency into who's doing what in real time, meaning right now, tick by tick, which is not the way the system works right now, people have confidence because they know that the transactions happen, that there isn't a delay in the transfer of money, the speed happens, and you know exactly the transaction can be tracked. You need less capital. Matter of fact, you might even need zero capital. You could start doing the margin process for an hour rather than 2 days. And that seems like a nothing, but we're talking trillions of dollars of investment capital that can be freed up. And I think that's what Marc is talking about in terms of regulation. Marc, if I got that wrong, please tell me. And the other benefits too.
No, that's exactly right. And it's a good example of how we're not talking about deregulation, meaning all regulation goes away. We're talking about having regulation that will actually improve capital formation and allow fair and orderly markets, those other prongs of what the SEC is supposed to be doing. And it's great to see Congress on the Genius Act, and it's great to see Chair Atkins at the SEC who focused on these issues and keeping investor protection in mind and at the forefront as one of the three pillars, but not saying investor protection means we all kind of stay home and don't do anything, right? Because I think we kind of learned from COVID that doesn't work out so well.
It doesn't work so well. So then there's tokenization, right? So we start at blockchain, we go tokenization, and then we can work up to stable coins. So tokenization, Larry Fink is on the tape yesterday saying, hey, we're going to tokenize ETFs, we're going to do all these things. What's happening? Why is that a thing right now?
It's interesting with tokenization, like a lot of these technological developments, there is a concern and a risk that they're fads, right? That there are things that are just everyone's jumping on the bandwagon, and just doing it, like the public companies that buy Bitcoin and say I'm a Bitcoin company now. That can be a fad, or actually there can be something to that, right? Now with these digital asset treasuries. So with tokenization, you could say, what does it matter if your interest in a security is recorded in a ledger somewhere, or if it's on the blockchain, you have your same interest in security. But tokenization, because of the power of the blockchain and because of the ability to transact in a transparent and efficient way, it really, anything that can be tokenized does have the opportunity for much greater efficiency, much greater utility.
Is token another word for fraction? Or is it something, a real substitute for the actual electronic security the way it is today?
It could be, it's one of those terms. It's not it doesn't mean just one thing. It's how anyone wants to use it. And so it really can be both of those things. And again, some tokenizations ideas do seem like fads because they can be done just as easily some other way, but others actually have a lot of utility.
Yeah, interesting. And then
go ahead.
And then stablecoin.
Yeah. So stablecoin is, by its name, stable. It doesn't sound that exciting. It's not the great hot investment idea that's going to make people a fortune. It's stable, right? But it is profound when you think about like the history of money, right? Stable, you can have a coin that is stable and it's not dollars, right? It's not tied to, it's not tied to any country. It's not what
it's backed by dollars or backed by an asset of some kind.
But that's the thing, and that's why it's stable, because it is backed by real assets, and that's why the traditional finance, TradFi, is behind it, as well as the digital asset folks, because it requires that you not be lending that out, that you not be hypothecating, that you really have those assets. So if you need the underlying asset, it's there. And once you have that, you have an alternative to currency.
Yeah.
Right.
Yeah. And does that result? So it's interesting. We last week we were talking a lot about gold. Gold is up another 10% this week. It's at $4,300. Silver's up at a record it hasn't seen since the Hunt brothers tried to squeeze. This is 50-year high almost in precious metals. And there's talk about a debasement trade and the dollar not being the reserve currency. But if you look at stablecoin and you look at who's actually trying to compete to house the jobs resulted from stablecoin, there could be a huge repatriation of dollars back onshore. And that means that it's actually very dollar friendly. So yeah. It's very funny. Andrew Ross Sorkin put out, the book 1929, and it's got a lot of buzz. And we talk about the plumbing or the grid or wherever you want to talk about it. This is the reformation of that grid. And if it actually results in more money coming back to the States, it actually reinforces us as a TradFi power. And then we're not a power. We are the system. It actually means that we're evolving and protecting our status. We're not giving it away. That's my own view.
I think that that's exactly right. And it's one of the reasons this is such an interesting time is because a lot of the traditional notions of what's right and wrong and how things work. I mean, take tariffs, obviously, right? People thought this was crazy. How can you do this? But when you step back and you look at it and say, what are we doing with these countries with their in terms of the trade imbalances, right? It may be time to reconsider things. And the dollar is something that really is reasonable to reconsider in terms of what you're talking about with repatriation and stable coins. The profound implications of this are not, I can't speculate what they're going to be,
Yeah.
but it is really exciting.
I was always a critic of Gary Gensler, but let me give the devil his due a little bit here. He's not stupid.
No.
He knows
No,
a
far
little
from
bit.
it.
Why was he so against this new ecosystem? I mean, based on what you're telling me, is that this is a transformative, potentially transformative technology, which could be. I think the speculation has way out sort of distanced the sort of advancement in the blockchain technology, or at least the usage of it. What is in his head? He obviously saw something funky about this.
Yeah, it's very hard. I don't speculate about politics really, but there is a lot of political pressure, and there was from certain senators in particular about financial regulation at the time that Gensler was, the head of the SEC.
Right.
And so some of the things that were done, I mean, a huge amount of rulemaking, but some of that, it's hard to say, well, this is something that a really smart person would have come up with as this should be a priority, right? But so I'm not going to speculate about that. When it comes to the digital asset piece and the crypto piece, look, if you're a regulator, it could be a little bit scary, right? Because of there is risk associated with new technologies, and there can be winners and losers. And one of the things that made Paul Atkins such a great choice to head the SEC at this point was the fact that he not only had the institutional history and knowledge of the SEC and its inner workings and its
Oh yeah.
mission, but also he had spent the last decade focusing on digital assets and crypto, among other things, but really getting deep into it. So he has a degree of familiarity and comfort with it that he's not he's not afraid to promote innovation when it comes to digital assets.
So are we there yet? I mean, I guess the question is, I'll give you an interesting story. My cousin of mine is a really rich dude, right? He's a small businessman who did very well. Private plane, the whole thing. He runs a very niche company. He's not financially illiterate, but he's not an expert at swaps or anything, or even crypto. So he goes, "Can I get my money back if someone steals money from me on the blockchain and I screw up? Can I get my money back? Because I can always get my money back from the bank if I'm hacked." And I said, "Probably not." He goes, "I'm never going to use the blockchain then to transact anything." So I guess the question is, are we there where this thing is a viable technology to transact? Because it seems like we have legislation, the Genius Act. Did a lot of reporting on that, following Senator Haggerty, and did yeoman's work pushing that thing through.
Yeah.
Other people. The act does seem to suggest there should be some sort of a way to infuse the technology to move forward, because we're not really there yet. And that's kind of where regulation should go.
Well, Charlie, you know what? To go back to your point about Gensler, it makes sense what he did in hindsight.
Yeah,
because his natural constituency was not embracing it. They were publicly against crypto, and maybe they were like, "Oh, maybe blockchain is kind of sort of." Yeah, but that it took 4 or 5 years. It just didn't happen overnight. Maybe more. It could be more than that. When someone first said publicly, I don't know if it was Jamie Dimon or Larry Finker, someone of that ilk, right? Who is at the center of the way the system works.
Well, they spoke out of both
His-
sides of their
yeah,
mouth.
yeah, but his constituency was very anti that. So he was like, "Okay, well, who's showing up to be, pro this thing?" And
Well, I mean, I can see how big.
it wasn't anybody that was in his control, right? So they were outside of his framework. And so now it's coming together, it's coalescing, but it's not a short-term thing, right? Where are we?
I mean,
These
listen,
things take 20. Bretton Woods took a long time, right?
10
You know?
years ago, if you talked to Larry Fink 8 years ago, he would have said, damn, this is not good. All these digital coins and all this stuff, it's not good.
That's right.
It's crypto because it competes with the dollar, and how are we going to sell our debt? I mean, that's what he would say. He's obviously singing a different tune right now. But I guess it comes back to, is this technology safe to use right now, the transact? And I don't think it is.
It can be, and it's not monolithic. It's not like there is one way to transact. Just because there is a blockchain technology doesn't mean that everything is the same. There are, like in a lot of industries, there are going to be winners and losers in terms of what works and what doesn't work. What's popular presumably will entail a degree of safety associated with it. And Chair Atkins certainly recognizes this as well. He says he doesn't want grandmothers investing in garbage, and like no one wants that, right? But to say that we're afraid of that, therefore we're going to get behind the rest of the world, because make no mistake, the rest of the world is doing this, right? The digital asset firms moved offshore. They moved. Right. They just took themselves around the world, and you can say that, well, there's greater risk there, but there's also greater innovation and development of technologies, including safeguards as part of the technology, because sophisticated investors want those safeguards. It's not going to be who can come up with the highest yield on anything. It's who can come up with a good yield and a degree of safety.
Before I think we got to wrap up. I'm getting the hook a little bit here. I have to ask this. I can't help myself.
It's our show. We can do whatever we want. Come on.
You don't have to answer this question.
Okay.
Where do you think Bitcoin's going in the next year?
That's not the right question.
You know why it's the right question? You know why it's the right question?
Why?
I guarantee every one of our viewers are saying, "Where's Bitcoin going in the next year?" You don't have.
If I had the answer to that, I wouldn't be on the show.
All right, perfect. We have to ask.
So, last question. Seriously, last question. What would you like in the last couple of minutes? Last question. What would be your last topic thing you'd like to say, you know what, this is important that we haven't spoken about?
I think
one on that list.
Sure. The last thing we haven't really focused on is this democratization, retailization, because I think that is very important, because that affects so many Americans, right? And it affects so much in the economy that you have $9.3 trillion in 401k assets that have been excluded from the private markets. And this idea that investor protection means that only the wealthy get access to the higher return investments really is fundamentally questionable, right? You can take investor protection too far to say, we don't want to hurt them, we'll keep it to ourselves. Obviously, you need safeguards, you need investor protection in some way, shape, or form. But to say that that's all off limits when you see that's where the returns are, a lot of good returns, that to me, that democratization is the term that people are using a lot more now. And I think it makes a lot of sense, because it really is pretty unfair to exclude wide swaths of the population from private investments.
All right, I think we got to leave it there. Marc, thank you.
Leave it there.
Thank you both.
That was great. Thanks, Marc.
Well, Bob, great interview. I'm glad I kept my mouth shut, let you take most of the lead on that. Let's see, listen, we gotta, let's let the dust settle on a lot of stuff. There's a lot of breaking news that could happen. We'll see everybody next week, where we'll unpack maybe WBD, maybe CZ, definitely the mayoral debate, and see where we are in the New York City mayoral election, whether a socialist is destined for City Hall. This is Charlie Gasparino for Risk and Return. See you next week with another live edition.